Hello everyone, welcome to Yadnya Investment Academy. Today we are going to discuss about third and final part of HUF series, that is how to create and partition the HUF. In the last two parts we have discussed what is HUF and how HUF helps us save tax. First we will discuss how to create HUF. There are three simple and one tricky step to create an HUF. Let's discuss them one by one. First is to create a HUF deed. Few points to note are: creating a HUF deed is not mandatory. However, it is always beneficial to have a HUF deed. A HUF deed is a written formal document on a stamp paper stating the name of Karta and co-partners of HUF. The name of members of HUF and the name of HUF is also required to be stated in the deed. The name of HUF is usually the name of Karta followed by the word HUF. Example, Ashok Kumar HUF. HUF deed also states the capital with which the HUF has been initiated. We will learn about it in our fourth point. A declaration is also provided by each member of family where they declare the authority and right of Karta for HUF management on their behalf. Second step is to apply for PAN. Since HUF is a separate SSE under Income Tax Act, therefore HUF have to hold its own PAN number. A separate application for PAN card can be made in Form 49A by the Karta of HUF on behalf of HUF for allotment of PAN. On allotment of PAN, HUF is required to file separate income tax return and can avail all the benefits under Income Tax Act as discussed in our Part 2 video. Third is open bank account in the name of HUF. As regards bank account of a HUF, it should be either in the name of HUF or in the name of Karta of HUF with a specific declaration that the account is that of a HUF. The members should also be careful and not deposit their personal funds in the HUF bank account, as only funds belonging to the HUF can be kept in it. Normally, only the Karta is authorized to sign all the checks and operate the account on behalf of the HUF. However, he may also authorize any other member of the HUF to operate the same on behalf of HUF. Now comes the final and the tricky step, that is funding of HUF. When creating capital or infusing capital into the HUF, following are the various ways. First and most common method of funding the HUF is through gifts. Gifts received from strangers, that is, who are not members of HUF and are not relatives, are exempt up to Rs 50,000 in a fiscal year. Any gift value exceeding Rs 50,000 will be taxable. If it is a new HUF, then you can take up to Rs 4 lakh gifts without any tax liability due to 2.5 lakh rupees exemption and 1.5 lakh rupees of Section 80C benefit. Secondly, a member can also give gifts to HUF to create capital. However, if the HUF invests this money and any income is generated, income clubbing provisions will be applied, which means income is clubbed with the income of contributing member. You can know about income clubbing provisions in detail on our video Gift Tax Part 2. If the gift is invested in a tax-free financial instrument, then any income generated will not be taxed to contributing member. And now gifts from relatives. Now few tax professionals consider that gifts received from relatives of members of HUF are fully exempt from tax. This is a way which is not well defined for HUF in the Income Tax Act and is open for interpretations. We would still recommend you to limit the gifts to Rs 50,000 per year to fund the HUF to avoid any litigations. Second way to fund the HUF is through ancestral property. The ancestral property belongs to the whole family and not just one individual. It can be transferred to HUF tax-free to create capital through a valid will. Also, the money received on sale of ancestral property can be transferred into HUF. HUF can also be funded by asset received after the split or partition of bigger HUF, which you are part of. Third and another very popular method of funding is by getting low interest loans from members. These loans can be used to start a business and the income from that will be HUF's income. but remember to give the reasonable interest and pay back loan in the reasonable time. Now let's briefly discuss about the partition of HUF. Partition of HUF is a very complicated process and should be avoided as much as possible. You should always take help of a tax professional for this, as the chances of litigation and disputes are maximum at this stage. Partition means severance of status of HUF. Partition could be partial or total. However, as per Income Tax Act, only total partition of HUF is recognized. Where all the properties of family are divided amongst all the members of the family and the family ceases to exist as an undivided family, it is known as total or complete partition. On the other hand, where one or more co-partners of the HUF may separate from others and the remaining co-partners may continue to be joint, or some of the properties are divided and the balance remain joint, it is known as partial partition and it is not recognized by Income Tax Act. Partition can only be claimed by a co-partner, but when there is a partition of HUF, the following persons are entitled to a share in the assets of HUF. The first is all co-partners get the equal share. Secondly, a child in the womb of the mother at the time of partition will also get the share. The mother and the wife, even though they may not be the co-partners, will also get the equal share. Now let's see the procedure of partition. As per the standard process, to complete the partition, after completing the split and getting nod of all stakeholders, it is mandatory to notify your tax assessing officer about the partition. It is his duty to know the exact portion of the division among the members and to hold an inquiry into the claim. Assessing officer will record and review the partition findings, and after that only partition will be approved and formalized. It is always advisable to take help of tax professional to take you through these procedures. So providing the summary of this topic, though HUF do provide tax benefits and is fairly easy to set up, it has few challenges too. Like, once a property is assigned to an HUF, all co-partners have equal right to it, so it cannot be transferred or sold without the consent of all co-partners. Partition of real estate belonging to a HUF can be nightmare. More often than not, it leads to disputes and court cases. If a HUF has only a few members, things may run smoothly. Problems mostly appear when the number of co-partners increases. Since all lineal descendants are part of an HUF, every child who gets added to the family becomes a part of HUF. Apart from HUFs becoming too large, the goal for which it was created has to be very clear. If the purpose is only tax saving, it may work only for initial years. As income and number of members grow, complications too increases. With that, we close this topic. If you have any question, please do write in the comment section below. Have a great time ahead.